My take on alternative investments is that they are just another bundled, packaged product for Wall Street to make money on.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Well, Jake, thanks for having me.
Yeah, and summer is in full swing. You'll be, as of the recording of this, you're going to be back in our office in about a week or so.
That's right.
So we're excited to have you back. I trust the baby and Cassie are doing well.
We're taking it a day at a time, That's kind of the way that it has to be right now, but things are going well, and I am excited to get back.
Yeah, we're really happy for you. And
Thank you.
It's good that Cassie has that extra time to stay home with Daisy, and so she's going to be hopefully a lot of help too with your family. And so we're real excited for you. I'm sure your whole life has changed, Cory. Is it true? Did your whole life change?
It did. Yeah, it did. I'm only a month in, but it kind of felt like it got flipped upside down, and now it's kind of getting righted again in a way.
Okay.
But it's just different. That's the best way I could explain it. But yeah, I mean, yesterday was 5 weeks. 5 weeks already.
Yeah.
I told Cassie, I'm like, well, we've survived the first 5. I was like, the next 5 ought to be easier. So we're going to take it a week at a time, day at a time.
That's good. And try to enjoy these moments. So
how's the golf game, Jake?
It's so crazy. It's up and down. I shot a 74 in a match at Mission Hills. I had an eagle. Cory, I don't know if I told you. I had an eagle. Nice. I holed it from 54 yards on a par 4. Sweet. To win the hole. The other guy birdied it, and I won the hole with an eagle. So that was cool. Then I go and play golf in a Falcon Wealth Advisors Tour tournament, and I shoot an 87. Unbelievable.
Yeah.
So I thought I was a hot weather player because of Texas, but it was hot, and I lost it. Like I just got really hot, and I lost my focus, I think. And so anyways, it's golf. I would much rather be here recording Upticks with you, Cory, than shooting 87s. I'll tell you that much. And people say a bad day on a golf course is better than a day at work. I disagree. I'd rather be I'm good at this.
That's why I hung up the golf clubs myself.
I want to shoot 87. So anyway, so that's what's new with me. House is coming along.
Good.
I'm excited for the Olympics. The Olympics are coming up here. Rachel's a huge fan. Do you have any Olympic sports that you're gearing up for or wanting to watch? Do you care?
Not really. I was really dialed into Wimbledon the whole time it was on since I was home, which was great. So I just haven't really quite gotten there yet with the Olympics.
Don't they play tennis in the Olympics also?
They do.
Yeah, so that'll be cool. You watch tennis in the Olympics. Golf is big for me. They are playing at Le Golf National in Paris or outside of Paris, where actually I got a chance to play last year, so that'll be fun. So I'll watch the golf, of course. Rachel loves the track and field, particularly the track. So we watched that show Sprint on Netflix. You watch that?
No, but I know the show.
So quick show rec for everybody. It's pretty good. They kind of highlighted some of those athletes. All right. It's not a show about this. Let's go.
Is pickleball an Olympic sport?
Is it?
I don't know.
I don't think so. Not yet. Maybe. I think it will be. Maybe. So. Isn't ping pong?
I think it is.
So yeah, I bet it happens. Just maybe not yet.
Okay.
All right. Before we get into today's topics, though, Cory, I did want to talk about a quick subject, and I was thinking about this last night, I believe. And so I want to explain why clients come to work with Falcon Wealth Advisors. And I have found, Cory, in 18 years that there's really 2 reasons. Number one is that they have a financial question or major financial decision to make, and they don't have an advisor, right? Yeah. So maybe they are approaching 5 years or 10 years from retirement, and the numbers in their 401k have more zeros, and they are starting to get a little bit nervous or anxious about retirement, but they've never worked with an advisor. Or maybe they are looking to buy a second home or move, or they've got kids going off to college, or they have new kids, and they don't know how to handle all of the financial organization that we offer for clients. And so again, they don't have an advisor and they need help answering some financial questions. That's usually number one. And I want to hear your thoughts on this. And then number two is that they have an advisor, but they've been getting poor service or poor investment performance, right? Their advisor maybe never reaches out to them to check in to update their financial plan. Or maybe the market's been pretty good the last few years, but their performance is stagnant and doesn't do anything. And so those are really the big two broad areas that I see clients working with this. Would you agree, or do you have any thoughts on that?
I definitely agree with those two. The third one that I would add to that, I was thinking about this as we were talking it through, might be people that have never had an advisor before, but have recognized that they don't have the time, skills, or expertise to just manage things on their own anymore. It's almost like there's a point where for a lot of people, they can manage things until they get to a point where it's like, all of a sudden, I'm no longer comfortable doing this, and it's time for me to find a professional. But I think that's probably the third that I would bolt on to what you said.
Yeah, we have a lot of do-it-yourselfers who have said either they're getting older or they're getting emotional, or they just don't want to, like you said, it's a full-time job. I mean, Cory, we have 19 people on our team, and we're not siloed out like a lot of other firms. So like, if your advisor works at a firm and they have 1,000 employees, but all 1,000 of those employees typically aren't helping you, right? They're off helping doing other things. Our 19-person team is all dedicated towards the same client base. And so, we have financial planners who are doing tax planning, retirement planning, budgeting, review meetings. We have an investment group that is literally trading clients' accounts and buying and selling stocks and bonds. And we have operations who are onboarding new clients, handling distributions for current clients. I mean, it's all of us in there working together. And there's 19 of us that are basically working, depending on people's schedules, 30, 40, 50 hours a week if someone's part-time or not. So again, there's a lot of work that goes into this, hours and hours and hours serving our clients and making sure their financial plans are aligned with their goals. So yeah, good one. Good one. I appreciate that then there. And a quick plug to our audience. Thank you so much for subscribing to Upticks. Our subscriber count continues to grow. Please like and share our content. The whole purpose of recording Upticks is to enhance financial literacy at scale. So Cory and I want to record our thoughts in 30-minute episodes so that we can share them with the world. So thank you for that. And Cory, with that, we'll kick it off.
Play ball. All right, Jake, the investing boom that's squeezing some people dry.
Yeah, Cory, we haven't talked about these a lot on the show, but what I'm talking about are alternative investments. It's kind of a new fad, in my opinion, a sexy, cool thing that a lot of advisors out there are pitching to their clients. Now, what an alternative investment is typically, and it can be, that's a pretty broad category, but what I'm talking about today is these are typically illiquid, sometimes private placements. So you can think of like private real estate property or business development companies, right? And the thought behind these, Cory, is that because they are illiquid, they force investors to be disciplined, which some would say, okay, because you can't get your money out of it. You can't sell when the market's crashing. However, you're just trading, though, that risk for another risk, which is liquidity risk. Like if you do need your money, you can't get it, or you have to sell it at such a discounted price that you lose money in the overall deal. And so I want to hear your take on this, but my take on alternative investments is that they are just another bundled, packaged product for Wall Street to make money on. And if it sounds too good to be true, if some broker or advisor is pitching you this alternative investment, you want to make very clear upfront how easy and when can I get my money back? Because I think that's a big question that advisors fluff over, and that's where people get into trouble. Do you have thoughts on this?
I do. I have quite a few on them, and it's interesting, Jake, because this comes from the perspective of me wearing the hat that I do at Falcon Wealth Advisors, and then I also serve on the board at my alumni foundation, and I've served as the investment committee chair managing the endowment. There's somebody else that manages the money, and there's more private placements that an institution like that has, but that's because, Jake, the timeline for the money for the university is in perpetuity. It's infinite. There is no time horizon. It is forever. So when we think about taking, and I think Sure, it can, but I still think you need to scrutinize the right deals, right? And scrutinize the right company. Like it's not just a blind, oh, I'll buy a private company and I'll make great money. But I do think when you take that same logic and apply it to an individual, me and you, Jake, we don't have infinite timelines, right? Our clients don't have infinite timelines, and none of us can predict the future. So I do think you're trading one risk for the other, but the liquidity risk is a big one. And I don't know if people recognize that. I mean, sometimes these can be 5, 7, 10 years before you can get your money back. And really the market environment, when some of these deals come to an end, right, when it's time to actually cash out, what market conditions look like then are more impactful to returns than what they look like today. Because if
Right.
these companies are trying to sell or exit in a recession, that's going to drive the returns down. So again, all of that goes into it. But I could make a decision today, Jake, to buy a private placement or to buy a private equity fund that 10 years from now is going to really determine my performance.
Right. So that, yeah, it's scary, it's complex. And let's not forget the hidden fees that are typically, or sometimes they're hidden, sometimes not. But the costs and the fees associated with these things can be very, very high. And you got to remember too, if these private placements are coming to you because they need money, are they really that good? I got a quick side note on that real quick, because this is crazy. Do you know anything about Renaissance Technologies, Rentech?
Yep.
Crazy. So,
Jim
quick
Simon.
side note, this is not an endorsement, but Renaissance Technologies, for our audience out there, is basically a hedge fund comprised of non-financial professionals who are basically these quote unquote genius mathematicians. And this thing has averaged, Cordy, 40% a year returns net of fees. Okay, which is crazy. However, what's interesting about it, Cory, no
Here it
one
comes.
can buy the fund. It's called
Yep.
the Medallion. I think they have retail funds now, but the Medallion fund, which is what I'm talking about, you can only get into it if you work there or if you are an alumni, meaning you have worked for the company. And that's my argument. Like these guys and ladies or professionals are supposedly doing a great job, right, managing this capital, but they're not out there asking for other people's money because they don't need it. And so, again, somebody's pitching you an investment, a private placement, be cognizant of the fees, be cognizant of the liquidity risk. If it sounds too good to be true, it probably is. So you don't need to go for it. All right, good. Cory, let's go on. Let's go into the next one. Let's go into the next topic here. So Americans chasing high interest rates risk falling into a cash trap.
Yes, Jake. So money has poured into cash-like investments like money market funds, treasuries, et cetera. Since the Fed began raising rates a couple of years ago in 2022, over $6 trillion, Jake, in cash has moved into money market funds since the Fed started raising rates. And this is as of June of this year, 2024. So $6 trillion. There's a few quotes from this that I thought were interesting that said people generally feel negative and pessimistic. If they invest based on how they feel, they're going to hang on to cash forever. And the point here was the opportunity cost of keeping money in cash, also the taxable interest that you're paying on it. But what I really took away from this is that the main point in this article was if you have hoarded more cash because interest rates have been higher, when do you let go of some of that cash and put it to work? And that's where the questions that popped into my mind, Jake, were what is your plan if interest payments shrink after the Fed lowers interest rates? And my real takeaway from all of this, proper financial planning, a proper portfolio to fund the plan, regular review meetings with your advisory team, eliminate the need to make decisions based on what we think will happen.
Yeah, that's good. Yeah, you don't want to get in this habit of trying to predict the future. That's horrible. Horrible way to live, frankly. And I've been talking to that about clients too, because we have access to a high yield savings account.
Yep.
And I've been making it very clear. I only want money in there that you don't want to invest. That doesn't really have to do with your plan, unless your financial plan has a goal that you're going to need this cash in 6 months, right?
Exactly.
Or a year, 3 months. So it's not part of your long-term financial plan. This is like, no, I'm going to buy a boat. I don't know what boat I want yet. Great. Let's go put it in the cash in this high yield savings, earn you some interest, and then go spend the money on a boat. Or tax payments. This would be perfect if you're paying quarterly taxes. Park the money in there. That's what I do, right?
Same.
I try to park the money in there for my quarterly tax payment, so I'm earning interest on it, or whatever I'm doing it for, or cash flow. Even cash flow. If you're talking about month over month bills, park it in there and then move it out, but not with your financial plan. Good one.
And I even thought they added to this, really this just the last point I want to make here, Jake, is what this reminded me of is that if someone is trying to move all the way in or all the way out of the market, go to cash, get out of cash, whatever it might be, you have to get it right twice, right? When you get out and when you get back in. And I think that's a big part of this. A big part of the article here was that, sure, interest rates have been higher, but market performance and market conditions have been generally favorable in that same time frame, at least this year. So there's been a big opportunity cost for people that are hoarding cash. And if interest rates start to go down, then what?
Right.
Need
Right.
to plan.
Exactly. Yep.
All right, Jake. So let's move on here. What we have next here is how to vet the financials of a continuing care retirement community. I'm excited to hear about this one.
Yeah. So long-term care is one of the hot topics, Cory, that we talk to with our clients a lot about. So it's either about them themselves or their aging parents. And not only do people worry, Cory, about the cost of how much this long-term care facility, nursing home, continuing care home, whatever you want to call it, is going to cost them. Now they need to worry, Cory, is that place going to remain solvent? Is it going to go under? I mean, how horrible would it be if, your grandma threw down $200,000 to move into one of these places and is paying $5 or $6 grand a month to live there, and then the place goes out of business? Then what are they going to do? So this is something that I haven't really talked about much, but I thought this article was fascinating. I really appreciate it. And I have some notes in here that I wanted to share.
Okay,
So
good.
number one, to hopefully dissipate some of this worry, is that the article suggests that you should find the financial. So if you're shopping for a long-term care facility, or what do they call it? I like the name of this. What is it? Community, what do we call it? Continuing care retirement community.
CCRC.
Have you heard it called that before?
No, I'm not.
Okay, CCRC, Continuing Care Retirement Community, okay? And some of these are really nice, by the way, right? So it's
Right.
awesome. But again, you want to start by gathering that community's annual financial reports. And these can be found under the About section on their website, or in the offer from potential residents, like if they give you a packet, or you might just have to ask. But it's okay to ask. You should ask for this, is my point. Next, you can also find, go ahead.
No, I'm sorry. I said, yeah, no, of course. You absolutely should. Go on.
You should ask. Yeah. And then next, you should find the insurance regulator for the state where the community is located and look up any the legally required financial disclosures, because that might give you some more detail if the company's in a lot of debt, right? And that's okay if they have debt, but you should just know about these things. Okay. So once you get the financials, so what are you looking for? You're looking for cash on hand. And the financial metric specifically is known as days cash on hand, because that's a powerful measure of liquidity. So again, that's something that you definitely want to look at there. It says that a well-run CCRC, Cory, has at least 120 days of cash on hand. But the rating agencies would rather see 200. So again, you want to see at least 120 on there if you're looking at the financials. Operating income is another big one if you're looking at the financials. It says to look for operating revenue that is within 5 to 10% of expenses, because that shows how the revenue flows, regardless of depreciation and other factors. And then the third piece on here is looking at unrestricted cash that the board can use for debt repayment. So again, it says that in the article, it says that they generally consider a ratio of cash over debt of 0.4 as the minimum. Below that, they get concerned that the community is falling into a credit stress. So again, you can get this from the financials and make your own assessment, or you know what? Come to your friends at Falcon Wealth Advisors. We'll turn it over to our investment management group, and they can analyze these financials and help you make sense of it a little bit in there too. Another couple points, and then I want to hear your thoughts on this, Cory, is that to take the long view. So again, a lot of these places are looking out for projections of upgrades and what they're doing to the buildings. And then another one to ask is if the occupancy rate is below 90%, why is it below 90%? And what's their plan to increase occupancy, right? So I personally like it when I don't hear things are overoccupied, because I don't like it to be crazy crowded, but it's a red flag. If you're going to one of these places and only half of it's occupied and you have to throw down, $200 or $300 grand just to get in there, are you going to lose your money? So again, things to look at. And again, the bottom line here, Cory, is do your research and then do some more research before you go into one of these things. You have thoughts on this?
Yeah, it's really good. I think you mentioned how there is a lot of financial details here that clients at Falcon Wealth Advisors can ask their friends at Falcon Wealth Advisors to help with. So that's one takeaway from all of that because there's just a lot there.
Mhm.
But I agree with ultimately your assessment of that, which is you need to do your research. We talked last week, right, about how the show is buyer beware. Here we are again, Jake, talking about the same
Yeah.
thing. But if you're going to make this type of investment, that it does make perfect sense. You want to understand what type of financial condition the actual facility is going to be in, because it is not wise to just assume that it's great and healthy,
Right, exactly. And I think people do assume that. I think they
which makes
assume,
sense.
Corey, because these places are expensive, that they are solid, but that's not the case. That is not the case. So again, they can still be expensive and mismanaged and
Right.
poorly run. And so,
And they have tremendous expenses, right? That's just part
right,
of it. So,
right. So you got to be careful going into it in there. Good, good. All right, Corey, let's go into the next one. Fed up with their car insurance bills, drivers shift gears. Look at that title.
how about that one, right? We like it. So, the first off, Jake, half of 50% US auto insurance customers have actively shopped their insurance in the last year, which is up from 41%. So clearly there's more people that are looking over the last couple of years. And we know that insurance has gone up. But what I thought was interesting from this article, Jake, was that in the past year, the average annual cost of full coverage car insurance was up 12% to just shy of $2,300. And that was in addition to a 7% increase the year before. So the point here is that the automobile insurance is one area where just the actual rate of inflation, how the premiums have grown, has grown more quickly than some other items that make up the overall inflation number. So this talked about, though, the driver shifting gears, right? So what are people doing differently? One is that people are shopping more often. They're talking to independent brokers to make sure that they, one, have the right coverage, and two, are paying the right price. Secondly, people are increasing their deductibles. More people are looking at, what if I'm willing to pay more money if I have a claim, if it lowers my premiums now, which makes sense, right? You just obviously need to prepare for that. Pay per miles plan. I thought this was interesting. So there's more insurance companies, Jake, that are offering this, where the less that you drive, the less expensive your insurance will be because it's tied to your mileage. Downside there is you just need to have, your phone in the car and the location turned on, and your insurance company is going to be tracking everywhere you go. But that is one way that it works. Yeah, that's how because it understands when you speed up, when you brake, there's all those elements involved. So I think the idea
Really?
is a great one. Yeah, the idea is a great one, but I was like, I just don't know if I want or need the insurance company knowing everywhere I go, how I'm driving, et cetera.
That's
But
really Big Brother, right? That's really Big
of
Brother-ish.
course, yeah, it is. It is. But
Wow.
it makes sense. It makes perfect sense. That's how they're going to
Yeah.
know.
Yeah.
And then lastly, though, is it's impacting purchases on new vehicles. There were just some people highlighted in here that have chosen to go with less expensive vehicles because they're not only are they paying less for the vehicle, but they're paying less for the insurance. So overall, I just wanted to share this because we've talked about this some on the show, insurance, inflation, et cetera. But this is just talking more specifically about some of the data and what people are doing right now. And I myself, Jake, just went through this. I just shopped my insurance and am making a change with insurance carriers for my home, auto, and umbrella, and I'm saving myself money by doing it.
Yeah, that's good. And I think, we had an insurance agent, Billy,
Mm-hmm.
on the show before, where I think you have to be careful because you don't want to shop it too much
Right.
because I think that will start to ding you from the insurance carriers. But I definitely think, obviously, if you make a new purchase, it's a good time to review. Like I switched when I bought my
Mm,
home. I think we switched. My insurance agent found a better deal for me and Rachel. So we switched.
great.
I think we switched all of it. And so I think at least every few years, or if you make a big purchase, it's a good idea. And now that's crazy though. That's up. I mean, that's almost 20% increase over 2 years in premium. So yes, that's definitely something you want to pay attention to. And I don't agree with that because I understand. Well, I don't really because like weather and patterns. Like I understand why home insurance is getting more expensive for certain areas because the weather's been more volatile. But a car is still a car, right? How are they justifying? Do they say anything about the insurance companies justifying the 20% increase over 2 years or 19, whatever it was?
Yeah, claims are more expensive because cars are more expensive because of
Wow,
technology that's in them, and
got it.
also
So it's
body
more
shops,
expensive to fix
etc.
these cars.
Labor's more expensive too.
Got it. So it's more expensive to pay the people to fix the cars, and it's more expensive to fix cars. Wow.
That's
Okay.
it.
All right, good, Corey. We got time for one more here. Let's go with
All right,
one more.
Jake. A backdoor Roth and two more ways to save on taxes.
Yeah, so for our listeners and viewers that don't understand what a backdoor Roth is, I'll just explain it real quick. If you make too much money to contribute to a Roth IRA, because there are income limitations, and if you or your spouse already don't have an IRA, you can do something what's called a backdoor Roth IRA. So basically you fund an IRA with after-tax dollars, and then you turn around and convert that into a Roth, hence the name backdoor. So you're kind of getting money into a Roth IRA from the back end, basically. Now, you always want to double check this with your tax advisor and then work with our financial planners, and they can go over the details of your plan and if it makes sense or not. So again, I'm not recommending everybody do this, but that is one way to do tax planning to set yourself up for potentially a lower tax liability in retirement. And so that's why Roth IRAs are so important to consider. They don't make sense for everybody, but you definitely should consider it at least. Another one that I thought was pretty interesting, Cory, was cash balance plans for small businesses or lawyers or doctors. So again, you can set up, it's not a 401k, but you can think of it as like a retirement or almost a pension for yourself. You can put a lot more money in there typically than 401ks, or there's different ways to fund them. So again, something you want to work with on your CPA, but it is a way to potentially lower your taxes if you do own a business. And then the last one is to understand that the Tax Cuts and Jobs Act is expiring in 2025. So let's do tax planning now. And again, based on the election, we don't know which way taxes may turn, but we know what they are today and we know what the rules are. So let's do tax planning now and get out ahead of it. If there's some advantages that we can look at now versus waiting 2 years and having a worse tax code, let's take advantage of that now. That's where I'm getting at with that. So again, 3 things. Look at a backdoor Roth IRA. If you own a business, you should consider a cash balance plan. And then let's do tax planning now, because we know this Tax Cut and Jobs Act is set to expire. And so we want to make sure that we're getting the max benefit out of it today. Any thoughts on that?
That's really good. I just want to add one quick item. I think you really summarized that nicely as far as the backdoor and the cash balance plan goes, and the Tax Cuts and Jobs Act sunsetting at the end of next year. The quick point I would just make there, though, is what happens with the tax code beyond 2025, Jake, is something that you don't know the answer to. I don't know the answer to. I don't know if there's anyone that is. So I do that, or that does, I should say. So for anyone who's considering that, I think you're absolutely right. Let's be aware of it. Let's plan for it. But ultimately, somebody's individual circumstances are probably going to be a bigger determinant for actually taking action than what may or may not happen with the tax code 18 months from now.
Right, exactly. It all boils down to your financial plan and what makes sense for you and your family. You could even have a coworker that makes the same amount of money as you, but their circumstances could be completely different.
They could be.
Their goals could be different. Their savings, their planning, all of that's different. So again, it pays. Let's meet with our financial planners.
Yes.
Cory, we've got 5 planners on our team now. That's what they're here to do. Take these review meetings, take these meetings with clients, get into the weeds, and let's talk about it and go through that with you.
Yes.
Good. Well, thank you. What we're looking for, you're going to have to put a suit back on now, Cory, next week when you come in the office.
Yeah, I've been thinking about that. I was like, I probably need to do that in advance. Make sure the belt's not a little too tight. That the suit's always what has kept me in check. So I'm looking forward to it, though. I'll be back in a suit next week.
We're excited to have you back, and thank all of you out there for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.